Hello and welcome to an all-new episode of the Bitcoin News Show, 101th episode, guys. Please forgive me if I am a little tired today. We just had 3 days of the Unconfiscatable conference. I'm really excited to do a quick recap on that for you guys. But before we do that, we are screen sharing the website here at cryptocast.network, where you can find our YouTube, Twitter, Instagram, Apple, and iTunes links. So you guys want to listen to the audio, that's great. You can do that. We also, of course, are screen sharing our QR code if you guys want to donate to the network, because, of course, this is a community supported YouTube channel, and we very much appreciate all the donations and feedback we get from you guys. So let's stop the screen share and just do a quick recap, guys, of the conference. It was absolutely amazing. I want to just do a recap and then we'll introduce the guests. But guys, listen, it was the Unconfiscatable conference, Tone Vases conference over there in Las Vegas, Nevada, guys. It was really, really, really great. A Bitcoin not blockchain conference. We had all the people there, guys. Giacomo, Max Kaiser, all the Peter Todd, all the great Bitcoiners are over there. We had a lot of great discussion. There actually is a live stream link available over there. Probably should have added that to the show notes, but it's definitely on my Twitter if you guys want to find that. And of course, at unconfiscatable.com. But basically, guys, I just want to quickly say, I just want to thank all the people that came and attended, all the people that came up to me to say hi, and really, really, really had a great time, guys. Thank you so much for that. Again, we had developer panels on there. We had trading panels on there. We had let me just lay it out for you guys real quick. On Thursday and Friday were the workshops, and Saturday was the conference. So Thursday evening, we had the carnivore dinner, which was so great, guys. Gave away carnivore shirts. Everybody was there. That was really, really great. Then Friday night, we had the poker tournament, and that was also live streamed as well. You guys can, again, find that on Tone Vases YouTube channel for both the live stream of the conference and the poker tournament. So Friday night was the poker tournament, and then Saturday was the big day, guys. That was the big conference. Of course, if you guys follow me, you'll probably see a few pictures that we tweeted out. Lots of fun there, guys. So really, really encourage everybody to check out the live stream, see the awesome panel, see the awesome discussion. It was really, really fantastic. And again, thanks to all the sponsors. Thank you guys to the speakers. Thanks again so much for everybody coming out. So much fun. I'm really, really looking forward to next year, because next year they're going to do it up crazy. We're going to try to do like 2+ days at least of a conference, and it's going to be bigger. It's going to be better, more speakers, more organized, everything. But just shout outs to a couple of people like Peter Russell, the graphic designer, the only graphic designer, guys. He did all the art, like the stuff hanging from the ceilings, everything you guys see in the pictures. He did all the art. So shout out to you, Peter, and shout out to, of course, Tone's manager, Mr. Mike Muzzman himself. Thank you so much, Mike. You guys, this guy single-handedly, like him and his wife, put together pretty much everything you guys saw there. So it was just really fantastic. Everybody kind of came together at the last minute to really get this. And really, it was kind of planned for almost a year, I think at least a year, guys. So it all went off without a hitch. Everybody had a great time, and just really, really looking forward to the next year. So thanks again, guys, so much. Now, let's go ahead and get into the discussion, because I want to introduce my amazing panelists, guys. As always, we got a lot of stuff to talk about with Bitcoin. So let's go ahead and go right down the line here. We got Mr. James C. of teachbitcoin.io. James, how you doing? Got to unmute. You have to hover the mouse.
Hi, Vortex. Yeah, I'm good. I'm really good. Thanks for having me. I appreciate it.
Yeah, James. Yeah, I'm really liking what you're doing over there. At your website, teachbitcoin.io, you guys are teaching the Lib Bitcoin library over there. A lot of great videos, just really, really great videos. I mean, detailed videos. You really break it down nice. Yeah, James. So, man, thanks, you guys. You got to check that out. There's some awesome stuff now. We got Joseph, or I forget his first name, but Moon. Justin. We got Justin Moon. We got Justin Moon's course. That's really awesome, guys. Check that out. We got James's courses, and of course, we got Jimmy's courses. So there's more and more Bitcoin courses all the time, guys. So thank you so much for that, James. Then awesome. we got Mr. We got Patrick Dugan, CEO of TradeLayer. Patrick, how you doing today?
I'm doing pretty good, man. We've been raging. Did a little hackathon yesterday, and so today was gonna be my day off. But I definitely recognize the value of the show and the community. It's a great honor to be invited, and I really appreciate it.
Yeah.
A little bit about TradeLayer. Basically, I was involved in the OmniLayer project back in the middle of the decade.
Well, Patrick, I want to get that from you. Actually, I want to get that from you, man. I want to get that from you. But first, we're just doing an introduction. So, yeah, Patrick.
Oh, yeah, we're keeping it light. Okay,
yeah, man, keep it light. Thank you so much, Patrick, for joining. You guys, all you guys. I mean, you're donating your time. We know you guys work hard in the community. You guys are out there every day. I'm sure you work far more than me. So, thank you so much, for donating your time, Patrick. I know you're a busy guy, man. Thank you so much for that, man. And then, you bet, man. And finally, we got Mr. Alex himself. I can't pronounce your last name. Delman. Alex
Edelman.
Edelman, Alex Edelman, come on, man. I knew that. Alex Edelman, guys, the CEO, founder of Lolly, an awesome Bitcoin company, guys. You guys got to check that out. Really, really cool stuff. Man, how are you doing today, Alex?
Doing great. Thank you for having me.
Yeah, dude, I love how Bitcoin your company is. Like, it's like this. You guys are very, very conservative when it comes to, the altcoins and things like that. You guys want to make sure that your customers are like really, really getting the real stuff, the real Bitcoin, not the fake Bitcoin.
Exactly. Thank you for seeing that.
You bet, Alex. Awesome, man. Thanks for being on, man. Again, guys, thanks so much for donating your time. Well, let's get right in here to these topics. We've got a lot of stuff to talk about here. So let's see, what do we got here? The first topic, digital garage, guys. It's kind of funny. I made the topic on the actual title like liquid yen to kind of confuse some people, but it's gonna be interesting. We're gonna get into it and explain why I said liquid yen, guys. So here we go. Mr. Digital James, this company, Digital Garage is teaming up with Blockstream to develop blockchain financial services in Japan. Now, I want to give you guys a couple quick takes before I ask you the question, so you guys are a little bit familiar. But basically, Blockstream launched this joint venture in Japan alongside Digital Garage, which is this early stage investor incubator. They've actually backed, though, a bunch of launches in Japan, like Twitter and Square. And they're actually, so their quote is, of course, they're dedicated to building Bitcoin and blockchain solutions for the Japanese institutional market. And their first product here looks like it's going to be SettleNet, which is which runs over the top of Blockstream's Liquid network. So that's really cool, which of course is tied directly to Bitcoin. And I guess their first product really is going to be this stable coin, basically, the stable coin for the Japanese yen over this platform. They've gotten clearance from the actual FSA over there, the Japanese Financial Services Agency. And their goal basically is the same way that their goal is the same goal over here that they're using Liquid in the US for, right? The goal is the same, which is to provide more liquidity to exchanges. So that's going to be interesting because Digital Garage is a public company with $120 billion market cap, right? So it's kind of big. And in fact, I want to just go over Samson's tweet real quick because he really, really describes this before I ask you guys a question. So here's what Samson said. He said, Digital Garage is a public company, a public company with 120 billion market cap. The other where is it? It's been FSA approved, right? And you can do atomic swaps and a trustless exchange, and it is a massive endorsement for both Liquid and Bitcoin. So let's go with you, Patrick, first on this. Patrick, what do you think of the stable coin on Liquid in Japan? This Liquid yen. I want your thoughts, man. I want them all. What do you think?
Well, okay. So first off, sentiment-wise, it's a good positioning. I was speaking with a friend of mine who spends a lot of time in Japan, who I work with as well. Like to work with people I'm friends with, and he was telling me the sentiment there is like totally crushed, right? People got so first of all, like the leverage, if you're doing leverage 4x, maybe JPY moves 10% or something, but it's not hundreds of percentage, right? So a lot of people got wrecked. A lot of people are still holding, and maybe they're a little up, they're a little down, but they're very conservative. So I think it's a great angle for that. I think that what I call Bitcoin dollarization or crypto dollarization is a killer use case in crypto. And you've got the derivative version of that, which I saw that they're working on. They've got discrete log contracts that are based on eventually Schnorr signature implementations, which is a whole other topic. But they've got that in the R&D pipe to do derivatives. So that's interesting. And then meanwhile, this product won't pay people anything probably. And it probably won't even make the trust company very much revenue in terms of passive carry because interest rates in JPY are so low. I mean, the reference rate's negative, right? That was since Kuroda did that in like 15, right? So so what might be interesting is if people are able to get a better deal holding yen in this form, earning nothing, but they save on fees relative to what banks are passing on to consumers. That's an interesting angle. And yeah, anything to onboard more people. I was there in the early days of the inception of Tether. I wasn't directly involved in it. I was in a sort of adjunct role, but I always thought that was a useful thing. And you know, they gotta thread it in with something to get the distribution out. I think if there's no yield angle or speculative angle, like with a lot of other things that Japanese people have gotten excited about, right? Like, you know, ADA started out as a crowd sale in Japan, right? Before it became IOHK's thing. It was this kind of sketchy ICO, and then they like refurbished it into something, you know, halfway decent, I guess. So they've had their speculative turn. Now that I think Blockstream's doing a really smart positioning. And I wish them luck. I want to see more traction, especially in Japan. I think Japan's a beautiful country. It's got a slow progress towards what you might call internationalization. I see it in the youth that like people want more new things, and the administrators are very pro crypto. They know crypto is going to be the horse that drives their wagon economically. Maybe not drives the whole Japanese economy. Not to oversell it, but definitely generate more revenues for them, tax wise, and give people some capital gains. Yeah.
Sure. So let me ask you this, Patrick. So is it really onboarding, like driving liquidity? Is that the main drive behind, the whole goal that they're trying to do here with all of these stable coins and then Liquid, of course, itself? Does that seem to be the main goal here? Just everybody wants to onboard more users, want more liquidity into the system?
Well, that, and it competes and cannibalizes the latent float of holding JPY deposits on other exchanges, right? And it's part of the overall trend that I think Bitcoin R&D people are jabbing at in different thrusts, which is we're trying to cannibalize all those revenues, get them in get them at the retail layer in level 2, at the wholesale layer paying fees on level 1, so that the blockchain can be healthy and secure when there's no subsidy left in 10 years, right? Or when it's very small. And this is a step in that direction.
Very interesting. Very interesting. All right, let's get Alex's take on here. Alex, what do you think about this Liquid Yen, this Japanese stablecoin over Liquid? Is this the future? Is everybody just going to be launching stablecoins now over Liquid? What's going on? And how did this really get approved? This when the FSA isn't approving like anything else, anything but Bitcoin.
I mean, I think it's a strong move by Japan, first of all, and I think that Japan has they were a first mover in e-commerce. Rakuten. So my last company was acquired by Rakuten. Got to spend some time in Japan and learn a lot about the history behind e-commerce there. And they were the first Amazon. They were the first Alibaba. And they failed in a lot of ways to expand internationally. And if you look at like why a lot of these companies that like Rakuten have failed to expand internationally, like payments are really rough and cross-border commerce is really, really rough. So for companies like, Rakuten and plenty of others that are very forward-thinking, that are extremely tech-savvy, and are leaders in payments, I think they see this as a way to expand their market share outside of Japan. It creates a standard. It lets everybody trade with JPY, lets everybody trade in and out of Bitcoin, and optimize for the currency that's going to drive to zero, and make for better, more seamless, lower cost transactions. So I think it's a really great move. I mean, clearly very early days, but like really good step in the right direction.
So let me ask you this, Alex, because we've seen securities with floor prices. We've seen floors. We've seen securities that try to maintain these floors and these pegs before, and they just seem to always fail throughout history. Like, why are these stable coins any different? What's going to make these stable coins stick around, or will they? Do you think that it's just a temporary phase, right, to bring more liquidity into as we transition from traditional finance over to crypto? Is this just a temporary stage, or what do you think?
Yes, really good question. I mean, I think that it really depends on how you define temporary. I mean, if you take a long view of like 50 to 100 years, yeah, it's temporary, but it might be for the next 5 to 10 years that, I mean, there's so many currencies right now, just fiat currencies. Like, you have to assume that a lot of those currencies are going to stabilize or transition into more stable currencies, and then there's a certain market cap in which that reaches a threshold, and then people start to realize that Bitcoin is more stable, that other currencies are more stable. So I think that as we get to a more singular currency for the world, I think that is that's going to take a long time. But things like this are sort of what has to happen to get there.
Interesting. Good points. So, James, I have some questions for you, man. So, like, I'll let you comment how you will, but from a developer point of view, I mean, are we going to be working with stablecoins anytime soon in our apps? Or are developers just going to pretty much choose to these open source solutions instead, where they have more permissionless, more freedom? Oh, sorry, you muted, James.
Yeah, let me. Yeah, that's where I find it a little difficult to provide you with any insight, because Like I understand where stable coins can come in and provide liquidity between exchanges or between institutions, but ultimately they're all, you know, this is the one thing that always mentally just I'm still at a blockade is like ultimately there's always some asset that one of these tokens are backed by, right? And as you mentioned before, it's like for me to create a tether, for me to create a liquid yen, I need to, you know, there needs to be a deposit of yen or somewhere, and there needs to be some custodian. And that's where I guess this tangents far more the traditional financial industry, maybe an industry that I'm not super aware of. So as a developer, it's not, it's hard for me to find that particularly exciting. I think it's more interesting from a liquidity or from a traditional financial industry point of view.
Yeah, absolutely, and I have to agree because as a developer myself, I'm not super excited to go out there and start working with liquid yen, like and all these fiat currencies and things. Now, liquid, of course, itself is pretty interesting, being able to issue assets and stuff like that trustlessly, and well, not fully trustlessly. They have a federation, but you know, in a very decentralized manner, anybody in the world can kind of connect to liquid and attach these assets, and use and for sure anybody can use a liquid wallet, right? So liquid itself is slightly more interesting, but just these stable coins, why, right? Like, when are we ever going to have to, you know, work with it? We've already got APIs for PayPal. We've already got APIs for, you know, for Visa and such. These things this whole stablecoin thing, just in my point of view, and I think you agree, is just absolutely uninteresting from a developer point of view. But I guess, you know, we do need more liquidity into the system, and like the guys have already said, you know, there's just only so many ways to do that, right? And hopefully this will be one of the ways, because we've seen Tether, right? We've seen Tether bring huge amounts of liquidity into the system and sustain huge amounts of liquidity. We haven't seen it fully crash yet. We've definitely seen Bitfinex go down a few times. Now, of course, Phil Potter is out, so who knows the shadiness, maybe possible shadiness that might be going in there, but still at the same time, you know, Tether itself is, I guess, serving its purpose. So any further comments on that, James?
No.
Okay, cool. Yeah, let's go to Patrick. Do you have any further comments on this?
Yeah, I think looking forward a little bit, they're definitely going to use this as a collateral for their derivatives, right? And then who knows what kind of interoperability bridge Blockstream is going to end up building between Liquid and Lightning Network. So you might be able to have contracts that are margined by Bitcoin, which is something we can get into, and also contracts that are margined by a bank coin, right? And they, you know, if you're trying to go short, you definitely want to be margining in a bank coin rather than Bitcoin, because then you have to sell more contracts to get net short. So there's that. And then from the point of view of, like, I am a Japanese fund manager, this is the only thing I can really hold as a base. But then if I could use it as collateral to participate in these markets, I might be able to derive some kind of yield from premium in the futures or swap rates if it's a perpetual swap. And I can be accounting everything as a JPY yield. And then, you know, if I'm a Japanese pension fund manager delivering even 5% PA in yen with a low drawdown, I'm doing pretty good. That's a career right there. Like, yeah. So that could be the Trojan horse angle in this, I think. We didn't see Tether quite go in that direction. Of course, like Bitfinex USD as a locust on the industry, right? Has you know, obviously been used as collateral for leverage on Bitfinex, and some would argue is itself a form of leverage. I've always kind of leaned towards Tether's fully reserve backed, and it's mostly AML risk, which is a different canary in the coal mine kind of situation. But anyway, I think we've all said enough about Tether, and you know, I don't know if you've talked about it on the podcast. I watched some episodes. I didn't go back and watch all of them, but you probably are tracking the growth of PAX and GUSD and whatnot relative to Tether. And you know, they had explosive growth in the latest downturn. And then the AML KYC stuff is making it a bit, it's kind of inhibiting. It's almost like a really successful web game that hits like 1 million daily users and then crashes. And then when they get it back up, nobody wants to, you know, they don't have the same growth rate. Right, you saw the thing with GUSD, and then they went to go arbit for PAX, and everybody was like, no, this is an AML nightmare. We've got everybody's grandpa coming in to smurf 2% off of 10 grand. And it was like a big culture clash too, because you got these like New York chartered institutions, and then you got like just like large populations of people in Asia trying to go verify their accounts with foreign documents. And it didn't flow, right? So in this case, this is like Japanese culture. There's a specific flow and format, and that's totally congruent. So this might, you might see people dealing with those frictions because they're just like, they don't think it's a big deal. They could do clever stuff like integrate with Line, and then people, they could try to do what I assume Jack Dorsey is going to do on Twitter with Lightning Network, and they could try to do that in Japanese social networks. There's all kinds of angles, and they're very well funded to do it. And I assume Blockstream gets some licensing revenue downstream, no pun intended. So
yeah, that's great. No, great points. Yeah,
I'm very positive about it. I wish I was doing it. That's my conclusion.
The social media angle and gaming angle might be interesting to see how they start integrating digital assets possibly in that route, or the digital liquid yen into social media or applications somehow. That's gonna be interesting to see how that plays out as well. Alex, Alex, do you want to go ahead, close out this topic for us? Any final comments on the discussion so far on this topic?
Yeah, I mean, that's what I'm most excited about is like the applications of how they're going to implement in like Line and potentially like Square, Twitter, and we can probably talk about that with the Zap conversation. But good segue into that.
Absolutely. All right, guys. So we're going to go to the next topic. But before we do that, just remember to please, if you guys are new to the channel, make sure to hit the subscribe button. And please, guys, give us a thumbs up if you get a chance. And the audio listeners, I would really appreciate it if you guys could give us a review over there on iTunes. We really, really appreciate it. We keep doing these shows every Sunday, no matter how I feel, even if I'm tired and dying, we still get these shows out for you guys. We really enjoy it. So hopefully you guys enjoy it and learn something as well. So let's move on to the next subject here. The new Zap point of sale app enables merchants to accept Lightning, guys. So Zap, of course, being Mr. Jack Maller's wallet over there, and we really he has a really great demo on his tweets. Has a tweet storm about it actually that we have linked to in the show notes that I recommend everybody check out. But I want to give just a couple of quick takes before we go into the start asking the panelists some questions. So basically, again, Jack does have this really great demo thread where he has a little GIF. Showing the actual software working, and basically the whole goal is to basically independently accept transactions on the Lightning Network. The merchant actually uploads their products to this app, and they can simply tap the items that they need ordered. So you can ask, and you can even ask the customer to add a tip, and then they are presented with the QR code. So it's very, very simple. Add the products, add the tip. QR code is right there, and then it actually is running on this hardware device that Jack put together. It's similar to the Nautilus device. It's like a Rock 64 board with 4 gig of RAM, 1 terabyte drive on there, and he built it just for this particular use case, and it actually is running Bitcoin Core, Lightning, and BTC Pay Server, so all the good stuff like that. And this really is interesting because it does allow the merchant to be in full control of their keys with no trusted third party or custodian. The BTC Pay Server, the Bitcoin way, and this really the whole drive of this, I think. Of this particular application really from Jack is just this goal towards self-sovereignty, right, for both merchants and for people alike. But now he's attacking kind of this merchant angle and really allowing merchants to kind of maybe one day just accept only crypto through these types of means and these types of systems. So let's go the other way this time. Oh, and actually, let's start with James on this one. This being more of a development, maybe a little bit of a developer take. Jack being a developer. James, what are your thoughts on this particular app? Do you see this kind of thing taking off? And like, how far are we from this? From somebody, for example, being able to make a device for this to be able to just hand out to merchants, where merchants can like purchase a device similar to how we purchase Casa nodes. Maybe there'll be like a merchant node or something like that. What do you think?
Yeah. Without having actually looked into the details of it, it sounds pretty interesting. I mean, like if I'm a merchant, one of the thoughts that I've always had is, like I have products, I have inventory, I have, and if I have like a user-facing app where my product data is kind of integrated. So depending on whether I still have 3 or 4 of these products that I'm trying to sell, that may not show up on that user-facing app at the terminal. So I just think this integration between payments and the actual merchant data, that's something that I've not seen too much of. Mostly it's just P2P. I send you an invoice and you pay it, but that's kind of divorced from the actual other parts of the transaction, namely the product or the merchant, the merchant transaction itself. So that sounds interesting. I haven't looked too much into it, but I think if I'm a merchant and I need to start integrating stuff myself, that obviously is a cost, right? And whatever cost that we can remove to introduce Lightning payments into merchant transactions, the better. Because it's already a big cost to just understand the technology, run my own node, set up these apps. So I think it sounds pretty promising. I need to look at it in details and really understand where the integrations happen, but I think that's definitely where we have to go. I mean, if I'm another point, perhaps, like as a small merchant, I think there's a bit of a trend for, a lot of these cloud tools where I can, Zapier is a great example where I can automate a lot of my different cloud tools and punch together my product data with my advertising spend data, with my inventory data, my CRM. That all kind of comes together where I, as a small merchant, I can configure things, through drag and drop. So if we consider that merchant, that type of small merchant, as our target user, then yes, definitely we want Lightning POS solutions where they can integrate all that stuff pretty easily, without too much technical know-how. So yeah, that's fantastic. That sounds really good.
Yeah, it's really interesting because it does. I think it's this Zap UI, right? That's sort of using PTCP server, I think, in the background to, for example, once you purchase something, to check the blockchain, right, to come back, and so and to make a hook there. And so I think this Zap UI over the top of this stuff is just so pretty. I don't know if you got a chance to actually look at the tweet thread, but it's very, very, very slick, very, very Apple-esque, right? Like just like the Zap wallet itself. So it seems like this is a win-win. So let's see what Alex says here. Alex, I know I don't think you guys are integrating Lightning yet into your service yet, but would something like this sort of make sense to be able to do this, or is this more of just for point of sale stuff?
Yeah, I mean, I think it's one of the coolest projects in the space right now. I love it. I think it fits our thesis. It's I mean, I think that Patrick kind of said it earlier. It's like if there's a million projects I want to be working on in addition to Lolly. I think this is one of them. There's one thing I learned from my last company is, like, in order to be successful with anything, you have to focus on doing one thing. And so we're focusing on one specific part, and that's distributing Bitcoin, having people earn it, and getting first into crypto without having to invest in it or mine it. The next phase that I see is, like, once people actually have Bitcoin, like the masses have it, then they're going to be looking to spend it. Our big vision that I'll sort of like lay out is that, we want to give people the ability to have Bitcoin, to own Bitcoin. And then there's like, okay, now I can go down to Starbucks and spend it. I can go to, my local coffee shop, wherever that is. Both of these have to exist. They have to have the wallet and then they have to spend it. So yeah, I think the interface is beautiful. I think it's good to give merchants the tools early. And also, like, just as far as having the product out in market, it puts more pressure on companies like Square to integrate it. And I've been saying this for a long time in private chats. But I think, like, the Square Cash integration is one of the going to be one of the most transformative things that we see in crypto. I think, like, Jack and team launching buy Bitcoin with Cash App. When you go walk into a store and any Square terminal, you can go pay with Bitcoin because it's native on your phone, and you have an added incentive because they have an added incentive because they don't have to do credit card transactions. They can just accept Bitcoin through Lightning. They have the distribution. So by Zap, launching and hopefully getting a lot of traction, I hope it puts pressure on Square to launch something like this and to distribute Bitcoin to more people.
Absolutely. And again, like, it's really, really great idea, like you say, earning Bitcoin. Of course, your company, Alex, allows you to earn Bitcoin. And this is, a merchant solution that will allow a merchant to earn Bitcoin. And it's really interesting because, it's very, very, very little setup, right? You just, if this box was for sale, like Jack's box, you would just buy the box, plug it into a computer and pretty much, run this. I mean, for anybody who's run a Casa node, you can see the possibility, the potential of how simple, the UI can actually can actually help somebody who's a very novice user, right? Even a novice user still set up a basic full node, right? So I think that this is going to be a big step towards that solution, and we'll see. Have to see how it plays out. Patrick, did you want? Yeah, it's Patrick's turn now. We gotta have Patrick comment. Pat, what do you think about this point of sales app? Is this the future? Are these point of sale apps that these people are like Zap are launching? Are they going to eventually compete with these big players like PayPal and such? Are they going to be billion-dollar companies one day? Patrick, what do you think?
Okay, I'd like to imagine so. I have a few points to make. I mean, the one that's probably not going to be like super popular is like, at least from my biases and preferences of what's interesting, I never really thought point of sale was the most interesting thing about Bitcoin. I've always thought it's really about if you can get your whole supply chain at the wholesale level and payable, you know, with escrows, hedges, probably this is the infrastructure you need. That's going to be very interesting. So, and I know an entrepreneur out of Singapore, Karen Teo, with Commerce, it's with a K. She's building on Ethereum, so she's like sort of playing for the other team right now. But like she's nailing it. And I know a few other people that are doing freight-based things on top of Bitcoin, who I'm talking to about helping them get hedging infrastructure in place. And I'm more sanguine about that. But absolutely, let's compete. There's also the other thought. There's another technical stack approach that we can take with sidechains, where sidechains are actually underwriting and caching transactions that are otherwise zero comp, and they apply some double spend mempool delay, and then they insure against reorg and stuff like that. And then there's the longer term interaction between sidechains and Lightning. So a sidechain that is collateralized can act as a verifiable watchtower at some level. Can be constrained by game theory, and it can provide services to Lightning Network. So in the meanwhile, what I'm wondering about in the back end of this product is the company itself providing some watchtower level guarantees on just like a B2B basis, which is a perfectly simple way to do it. So I'd be really interested to learn more about how they're handling that. I imagine they're doing something with their own servers, and it's not totally decentralized, but probably it's going to work, which isn't necessarily a requirement for things to work, right? So I want to see how it operates. And then my third thought, I was recently in Machu Picchu, and it was raining in the allotted time that we were in there, and we were soaked, and there was a line to get. We figured, fuck it, let's take a bus, you know, you can't walk down, it's gonna be muddy. But there was like an hour-long line to the bus, and everybody is like taking out their visas, and they got to show their passports. I mean, the bureaucracy made it slower than just the friction in the point of sale. And by the time I got there, like my fingers were tingling, like I didn't have any feeling. I had to sign the thing like with like this, you know. So when we can have point of sale technology that people could use casually in that scenario, I'd say it's perfect. So this product might be like 60% of the way there. I'd have to test it. What I like more than phone kissing for point of sale is something like Tangem. So I met this dude, Hugo, at the LiveBitConf recently, and he's got also a company out of Singapore called Tangem that produces these cards. And they have a chip in them, and you can basically create like an invoice in Bitcoin, and then put in a PIN that's like your salted password. So, you know, that's not a level of entropy you would want to put a lot of funding under, but like it's perfectly cromulent for like 0.02 BTC or whatever. So I can see something like that catching on, and that's a company that people should talk to about integrating their tech like this. Because they basically just manufacture SKUs, right? So this company,
well, I mean, essentially, like
could interoperate.
Well, yeah, essentially, like, you know, I think that thing is more like banknotes, so it's more like gift cards, akin to gift cards, almost. You know, I think the experience, would be a little bit more. But that'd be interesting too. I mean, because the combination, right, of that could also be really, really interesting to see. Because I mean, you have some good points, Patrick. Like, you know, the point of sale stuff really wasn't super interesting in the beginning of Bitcoin. I mean, for me, it really wasn't. I know in the early days, like Roger, right, tried to onboard every merchant on the planet and try to get everybody using Bitcoin. But of course,
that was Roger's whole playbook.
Right,
was
right. But of
get
course,
all the merchants. Yeah.
But of course, what we learned is you
happened?
don't exactly. We learned that you don't start with the merchants, right? You eventually get to the merchants, but you don't start with the merchants. And so, yeah, so what we saw was, of course, a lot of merchants in the early days. Like as soon as the price went down, all the merchants took off. It was too complex. The software wasn't really easy to use back then. And so, what did we see? We saw most of the merchants just stop, using Bitcoin. And because it was just too early, liquidity wise, software wise, all that stuff.
And
but I think
there's a deflationary preference when the price is down. So it's mostly about people being really giddy about their unrealized capital gains, and then they're like, hey, I wouldn't have bought a Lambo if I had to like get a suitcase full of cash, because I would have felt like a jerk somewhere in the whole process, but now I can just buy a Lambo or Tesla or whatever. I don't know if they ended up taking it, but you know what I mean? Like, it's been majorly this sort of phenomenon. And
I think with Lightning though, of course, see with Lightning now we have this new opportunity, this new chance, and now with software like Zap, right, and this POS, I think we can start getting excited a little bit about it again. Personally, like how I saw it is, and I've said this before in a podcast, is I don't really see the merchant adoption S curve really start happening until 2020, 2021. Minimum, like the earliest, that's when like we'll actually start seeing some kind of uptick adoption that we can quantify, with graphs saying put all these companies next to it and to see how many are beginning to accept merchants via Lightning, right? So it's going to be some time, but I think this is a great first step, and we'll have to see where it goes. Let me ask you this real quick, Patrick. Are you guys, because you guys pretty much have a protocol for decentralized exchange? let me ask you, do you guys work with Lightning at all? Or you guys have any plans to work with it in the future?
Yeah, we do have plans to work with Lightning. It's not what I invested in terms of R&D directly. We were mostly investing in exploring side chains. And so we've got a prototype for a fraud proof, kind of like how Plasma works on Ethereum, but you can just do whatever code execution in the EVM and you can factor it out to make it less expensive. And in Bitcoin, the statefulness and the computronium density of Bitcoin is rather low, you see, right? So you've got to, so with Omni and with TradeLayer, which is a fork off of Omni, we're doing embedded consensus. So like the way Tether works, those are op return transactions, and then parsing all of those and all the other kinds of transactions like the trades creates a consensus hash, which lets you know that you and these other nodes are all in consensus about the state. And then you can code pretty much whatever logic you want. And it's sort of auto magical in that way, and it like just works, right? So
auto magical. I still like that word.
So I like with the discrete log contract, there's a Schnorr signature and there's an oracle, and the oracle can reveal the secret and include the metadata. I mean, I'm like way oversimplifying it, but that's like a whole mechanism, right? And so we added derivatives contracts and a peer-to-peer clearing algo for that, where just based on the global consensus, we have a math PhD on the team and another academic guy with academic background who researched this. And you create this big graph, and then you can figure out a way to find the routing path that allows you to net everything out at zero at like an acceptable settlement price, right? So we could apply this to Lightning Network, and it's something we're interested in doing. And then the longer term thing, like right now, we could collateralize the sidechain with a meta coin that we're going to do a fair launch of, but I'm not going to show that. Let's just leave that ... And so that's one angle. Like long term, we want to do revenue models where it could be Bitcoin, it could be the meta coin, right? And we want to transition more towards this. So could we close the loop where you could collateralize a sidechain with Bitcoin and have a fraud proof trigger the release of that in case that the sidechain has a collusive 2/3 Byzantine threshold, right? So Tendermint and similar protocols lean on the original Byzantine generals problem paper from 1982 that defined this 2/3 threshold, and it gives you a pretty good way of doing things very efficiently. But like it's the same issue with underlying liquid or underlying rootstock 1.0. How do you trust the validators with the collateral custody of the Bitcoin? You end up getting into the same problem as you might have with
right.
any exchange, right?
I think with Liquid, of course, they created the federation model, use the federation model and things with that. So I don't want to get too much into that, but that's very interesting. Sure. Yeah, awesome, Patrick. Really great points. Really excited to see where where Lightning can kind of integrate into that amazing stack.
Yeah, definitely. Well, ultimately, like Schnorr and Mast are like, the planet for Melancholia, and like, it's
hey, that's a good segue. Because we're about to get into that topic. I'm about to do that topic right now. So great. So guys, so again, we're about to go into the next topic here. So again, guys, if you guys could make sure to check out, the Twitter account at CryptoCastNet. We do that's what we do. Show all the shows and everything like that. And again, guys, if you guys could hit the thumbs up button, we would very, very, very much appreciate it. So I wanted to get into this final topic here. We're kind of running a little bit late, but it's fun. Lots of stuff to talk about here. We're going into the final topic here, which is the next generation of Bitcoin features, which we're talking about Taproot, Graftroot, and Betterhash. Now, guys, I know none of us here are actual protocol like developers. James, of course, is a developer. I'm not sure if you're a protocol developer, James, but I think this is still interesting to comment on, still interesting to speculate about, because this stuff is being worked on right now. It is coming down the line, so I want to see what everybody thinks. And I just want to give a shout out here to Aaron Van Weerdum. I mean, Aaron, the articles, man, what the hell? You keep making amazing articles for us all to be able to digest this crazy complicated technology. Again, shout out to Bitcoin Magazine over there, where he's writing all these articles. You guys got to check that out. Give him a follow. Really great and excellent work. We've had Aaron on the show before, of course, as well. So again, thanks to you, Aaron, so much. And then quick thanks to Segwit, because it's the Segwit scripting versioning that is going to allow us to even roll out these new features. So yeah, thank you, UASF. Thank you, Segway. Yeah. All right. So I just want to give a couple quick takes, guys, before we get started here. So basically, Taproot, was first proposed by Gregory Maxwell. It does expand Bitcoin's smart contract flexibility while offering more privacy, and it's even allows more complex smart contracts that would use Mast. It can actually make those appear to be like normal transactions on the chain. So that is really interesting. The actual core contributors are working on a Schnorr signature proposal that would include Taproot, and so as an all-in-one upgrade. That's what I'm really looking forward to. And Graftroot is essentially the follow-up to Taproot that we can maybe integrate later down the road, because it's essentially Taproot but even more efficient. So that's going to be offering even more flexibility. So that's going to be some pretty crazy stuff. But that's even further down the line. But then finally, Betterhash, guys, is going to help this new protocol to help decentralized mining. It is the successor to Stratum, this protocol layer that goes between the mining pools, clients, and mining hardware. It does allow you as a miner to be able to create and construct your own blocks via your own block template, which is pretty cool, because then you get to select the transactions, and the pool itself can't be censoring things, right? Because you are constructing the transactions. Because right now, the pool could very much censor your transactions, and you would have no choice but to just leave it and go to another pool or start your own pool. And so it's really cool. And finally, this Betterhash allows you to actually send weak blocks, which is really cool because it's a more optimized version. It helps pools more quickly optimize propagation. So again, more features, more optimization, more efficiency, amazing stuff coming down the pipe for Bitcoin. So I want to get the panel's opinions here. We'll start with James here. James, what do you think about all this stuff? Taproot, Graftroot, Mast, allowing for even more complex signatures. And then, of course, we got the Simplicity programming language. It's going to take advantage of all this in a couple years' time down the road. What are your thoughts on this?
I think it's really interesting. I mean, from a developer's point of view, you learn Bitcoin and you learn about the script machine, the script interpreter, and how these outputs can actually, alter. They're basically like a state machine. So when I spend Bitcoin, there's certain conditions that my input script have to fulfill. And necessarily that execution is then replicated on every node, right? So every node in the network verifies the spending of that output. And by verifying, they have to go through the exact same script execution with the exact same script machine on their local device. So I think what's interesting about Taproot is, so the idea is that I can now have more complex conditions, spending conditions. And I actually don't want every node of the network to go through that verification of the actual script. So all this, opcode execution that we went through to design our smart contract, as long as all these signers in this complex contract can agree that those conditions have been fulfilled, they basically sign together, right? And so what you have then is this, exactly, you basically have like a regular, pubkey hash output and an input spinning it with a single signature, because we now can aggregate them with a Schnorr. So that's pretty interesting, right? We're literally taking all the, it's still being verified, but we've offloaded a significant part of the verification off the network, right? So the network trusts that all these parties in that contract agree that that the spending conditions have been fulfilled, yet we don't actually literally verify it through the execution of the script code. That's pretty interesting. It's an interesting concept that I think is new to Bitcoin. It's going to take a while for people like me to just wrap my heads around it. But again, it does allow us to improve privacy, especially for more complex contracts. And I'm excited to see where this goes. I don't even know. I've never really thought about explicitly about what kind of contracts this would really enable and boost. We're so early in Bitcoin, but I think this is this the key feature will enable it, and we'll go from there. Really excited.
Absolutely. And let me ask a quick follow-up. I mean, it is Schnorr that allows you to do thousands more, right?
Yeah.
In an efficient way, because with the ECD, I can never say it, ESDCA or ECDSA, you can only do so many, right? It's very, very inefficient. So with Schnorr, we can do these
validate
thousands,
faster.
Faster and more efficient. Okay, really awesome. Really, really cool.
Exactly.
All right.
And then regarding, I think the second topic was the mining pool. That's interesting.
Betterhash. Yeah.
Betterhash. Yeah, exactly. That's interesting to me because now, so I mean the critique, I guess, previously to the what's his name again, Blue Mat's relay system. Now the name Fiber. Thank you. Previously, the critique was okay. So we've reduced or eliminated block propagation time, but we've solved it in a way which is highly centralized, right? So basically, brought block propagation down to zero, but we've basically moved the point of centralization to somewhere else, and
shifted it.
Exactly
the point of centralization.
Exactly. So either the mining pool operator can censor blocks, or potentially a relay, right? And so now we say, okay, so the relay now, the payouts for mining pools, we decouple the payments from the actual creation of the block templates. So the block miner, the mining pool operator, the miner himself has certain, he could optimize his block template as he wishes, and the pool operator doesn't have the opportunity to censor the blocks or to dictate what blocks he has to do. So there are 2 points I think are interesting. The first one is the actual optimization of the block template is actually pretty difficult, right? It's a difficult problem to begin with. I mean, they're simplified. Like if you get the block template from Bitcoin D, it's a very simplified heuristic, but to be able to optimize better than a professional mining operator, that's a big question, right? Like how many individual miners are able to do that? And if you're not, you're going to continue to accept block templates from a mining pool simply because he's going to do a better job at producing optimizing these block templates with a bit higher fees. And the second point is, okay, so the payouts are still centralized necessarily. So I don't quite understand how Betterhash works, but essentially the Coinbase output still has to pay out to the mining pool operator. I get to add different transactions into it. I get to add transactions like that in my local mempool, which I find more rewarding. But ultimately, payout still comes from the mining pool operator. So indirectly, he can refuse payouts if you don't censor transactions, which he wants you to, right? So there's still leverage there for the mining pool operator to censor blocks indirectly. So yeah, I'm those are questions I still have. Maybe they're solved, but those are my reactions.
Yeah, great points. It's really interesting because there is some criticisms, from Eric, right, from LibBitcoin about how it's just essentially just shifting, the responsibility. But however, as it stands right now, it's 100% in the pool, right? So at least I think with this, I think Matt's argument is we can at least have the option to be able to shift it to miners, and if miners should choose to do so. So yeah, very interesting. But yeah, I mean, who the heck is going to be able to construct, better that? Well, maybe the idea maybe is over time, right? That could become more democratized or more easily accessible, more easily the information more available so that anybody can go and just maybe do some copy pasting. But it's probably far more complex than that for now. So that makes sense. So thanks so much for your comments on that, James. Let's go to Alex next. Alex, what are your comments on this crazy amounts of technology coming out, Taproot, Graftroot, and Mast, and this amazing smart contract stuff? I mean, there's so much stuff coming out that I really, really find it hard to follow anything other than Bitcoin.
There's so much cool stuff going on right now, and I wish I could spend all my time, just reading about it. It's amazing. I feel like every day I'm just like, the excitement that, when you first hear about Bitcoin, And then you're like, well, wait a second, what about privacy? And then you see all these coins come out, and then it's like, wait a second, people can do that on top of Bitcoin. And to start seeing these projects, even albeit early, it's really cool. I think like, my criticisms of Bitcoin are like, people are answering and people are building, and it's taking all of these interesting projects, putting them together. So just from our standpoint, like, I believe in privacy. I believe that everyone should have the right to privacy, and it's becoming increasingly more important to have that in this, the world we live in. As far as like we would ever, implement it, like, absolutely. Like, if you're paying for things and you don't want, people to know that you're paying for those, or you're earning for items that you've paid for, ideally those are not on chain. So we mask that, by doing bulk purchasing of Bitcoin and distributing it our own. So you really can't track it to begin with. But there needs to be an on-chain solution that can make that more efficient and automated. Because right now it's like, us in the background doing it. So it's good to see these things happening. I think that retailers will be really excited to it. And ultimately, like, consumers have to be excited about it too. And every time you're paying, if you're paying for privacy and you're paying for that, I think that'll become increasingly more valuable over time and attract more users, the same way that Braves attracted users for privacy browser. We don't have to talk about that, but we can say people are attracted to privacy now, and that's great. So it'll drive demand.
Yeah, it does seem like, with the scaling kind of behind us, the block size debate long over, it seems now that it really is privacy fungibility is the main point, which of course what we pretty much predicted right after, because that is the second biggest problem after scalability. So is fungibility. And now, of course, we see things like Lightning, right? So maybe Lightning can be that solution where you guys can do most of the, keep most of the stuff inside of Lightning and not have to settle until maybe a month or later, and then in that way it becomes even more difficult to track who does what, with your guys' service and things. And even now, with if Schnorr and Taproot get in here in the next year or two, next couple of years, then it seems like you can do even some more complex privacy on chain, and again, still make it look like regular transactions on the chain. So yeah, it's going to be pretty interesting stuff. And of course, it sounds like you guys are ready and willing to check it out and implement it.
Yeah, I mean, my quick response on that is just like, I mean, we want to distribute these when they're ready, and I think we have the ears of these retailers. We just passed 750 merchants, so we are driving sales for these retailers. We're building these strong relationships, and when these technologies come out, we want to be the first to bring them to these retailers. So these are incredible. These are questions that we're getting all the time.
Awesome. All right, Patrick. Last but not least, my friend, on this topic, what do you think about all this craziness and the discussion so far, man?
So Betterhash is the easiest one to talk about. Mask is a very meaty topic. It's probably what the acronym stands for. So it starts with meat, and I don't know what the rest is. Just kidding.
It's not Merkleized abstract syntax trees or anything like that.
Yeah,
it's meat something.
Yeah, it's got to be something to do with meat. So, Betterhash is a fundamental increment towards a more robust underlying infrastructure, and it's a defensive play, right? Like, we've had a mass exodus of the mining capex that's securing the blockchain out of China, which in a way is a really good thing because it takes away some of that political tail risk. But some of the biggest mining pools are still operated out of China, right? So this is a step in the right direction. I think that the other panelist made a very good point regarding the payout insurance. I wonder if there's perhaps some kind of financial underwriting that can go on where either here's a contract with a certain amount of margin, maybe more margin than you need, and the oracle is the Coinbase input and some metadata regarding the recipients. So if there aren't subsequent payments within n+1 or n+2 blocks, then this contract would pay out the corresponding amounts anyway, something like that. And that would be an added bit of insurance that the pool operator would have to provide to underwrite. It might only be like one block reward, right? You only have to settle this one block reward at a time, and you roll it along. So there's room for improvement maybe, right? But yeah, it's a huge step in the right direction. There was all kinds of attack vectors. Funnily enough, it was a Ripple guy who shared with me a paper about it, but it was a legit paper. So this maybe would render some of those attack vectors difficult to execute in the future, right? So that's a very good thing. It's sort of like the defensive infrastructural play to like MeshNet's offensive infrastructural play, where like our default state before Bitcoin was the NSA controls all the tubes. And we're trying to change that, but this is like, let's prevent the CCP from censoring Bitcoin. It's very nice. Yeah, so Mast and Schnorr are probably going to be the tip of the spear for BTC becoming the most operable collateral that it can be, right? And that's generally how I think about BTC's valuation and how I think about Bitcoin maximalism. It's about relative liquidity costs and the network effect power curve that emerges. But there are examples, shitty ones, but examples of other things than like US Treasury bonds, for example, which are sort of like the Bitcoin of the legacy financial system because they have the lowest liquidity cost, right? But like Argentine bonds that had already been defaulted on and restructured were used as an alternative to Bitcoin. When I was buying and selling Bitcoin to survive in Argentina, the people like Globant, which was a big, it still is, it's a big outsourcing business, pays a lot of guys. They would buy these bonds in New York and sell them in Buenos Aires, and there's a lot of liquidity cost. Yeah, it's sort of like we have capital controls, now use our shitcoin to scoop your money in. But yeah, ultimately, or like Ethereum, right? With Ethereum, you can do MakerDAO, and you can just blah, blah, here you go, it triggers this payout. You can't do that with Bitcoin right now. So with Mast, I mean, you can kind of do it with the Lightning Network, but the Lightning Network is somewhat incomplete in terms of app fungibility and programmability. So the other side of it is, it's probably, I'm hoping, especially for my case, because it gives me a window to actually provide some unique value to the network, is that these things are going to take a little while to come to fruition, right? It might be 3 or 4 years. And it's going to be a lot of test netting, and it's like Joel Slotsky said, good software takes 10 years. So this is a part of that, right? And getting into the nitty gritty a little bit, the current configurations involving different combinations of signatures triggering things in a Mast contract, it seems to be it's almost like we're at the Lego stage still, and eventually we're going to have derivatives that are going to be either a Mast construct, or the Mast construct is what so you could have like sets of Lightning Network nodes that obey certain clearing rules, right? And you could have a side chain who's also acting as a watchtower, who is acting as custodian, and you could have a Mast construct binding certain amounts of root collateral, and then you could have the looser Lightning collateral. And then people could be signing Schnorr contracts in order to engage discreetly in transactions. So they could do it in Lightning very, very simply with a unicast. But the problem is, how do you clear it? How do you aggregate a lot of those at some, not at a global level necessarily, but at some level of scale, in order to then trigger a settlement event, right? So this is something we've been doing research on. And it's probably, you could probably set it up where instead of, like what we do is we create this graph, apply the manipulations to it, come up with a set of changes to state regarding the balances, and it's all one big global process. But with Lightning, you could do it in a domino sequence, right? Because everything it's a bit of a note passing situation, right? So then the hard part is who provides the data and the oracles and stuff, and I think that's something that this isn't going to necessarily provide a solution for. I think the solution there is to actually create something that you have on-chain data for. But anyway, so yeah, ultimately, like Mast is the harbinger of R&D supremacy that will envelop everything. But in the near term, it's interesting to consider that you couldn't do a layer token in Taproot because you're obscuring the underlying inputs, right? So right now we do everything with op returns, and it's a global tally. But you probably could do a derivative contract in Taproot as well. Same way that with Mimblewimble, like it would be really hard to do a token layer on Mimblewimble because you don't know what the heck everybody's actually signing off on. But with the derivative trade, because it's basically a positive and negative coming together in that atomic transaction, I think it is possible to do in Mimblewimble, and I think it might apply to Taproot. And I'm not as smart as Peter Wiley and Greg Maxwell, but we pick up some of the pieces where those guys have neglected. Like those guys never really took Jaquan's work seriously with Tendermint because it's proof of stake in a sense. It's like a perfection of proof of stake. And so the sidechains research in 2015 got into a bit of a cul-de-sac because of the recursive problem with a proof of work sidechain and a proof of work main chain, and the SPV proofs have to be covering 1,000 blocks to get you that friendly finality threshold, right? And then you've got chains like Decred and what Ethereum 2.0 might end up being. It's probably not going to go the full Vlad route where it's like, what's going on? It's the matrix. I mean, that's maybe not doing his work a service, but what Vitalik's done with a friendly finality gadget, you have a hard threshold in the protocol where everything is final. That's probably really useful, right? Finality is a big problem in Bitcoin, etc. It's not a silver. What's that?
We certainly won't get too much into proof of stake. That's for sure.
Yeah, well, I'm saying Mast is not a silver bullet for solving finality, for example.
Right.
But all of these things are going to suit together. It's going to be fucking awesome. There's going to be settlement networks between all the layers. There's going to be bank coins. There's going to be derivative back coins, and then there's going to be a lot of Bitcoin and cycling around. So
settling to Bitcoin, my friend. I think the center of gravity, liquidity wise, is going to be that underlying what Von Mises would call power money. Maybe it's Hayek's. I don't get those guys separated too easily. But yeah, you got the base of the pyramid, and then you go up. So that's what we're building right now. Lightning Network, you might say, would be this caching layer for underlying liquidity at an atomic level. Then you've got these more complex channels that involve state with a BFT sidechain or with the state channel. I was talking to some Ethereum guys earlier in the week. Well, even Liquid
about sidechain. About state channels and how state channels could potentially be like what you do with the sidechain, but you can just root it into the underlying rules about changing state there. So I think we're going to end up having something of a unified theory of multi-sig interactions with collateral within 4 years, let's say. I
say 3 to 5. I was predicting like 3 to 5 between where Mast and Schnorr would be able to be both integrated into the next version of Bitcoin and nodes, and actually the ecosystem starts adopting like in a meaningful percentage. So I was thinking 3 to 5 years, and this literally could the Mast, and because that by then simplicity should be getting close to be ready, if not ready as well. So when you combine simplicity with the capabilities of Mast, the flexibility of Mast, and then of course the optimization and efficiency of Schnorr, it's like, holy Lord, it's going to get kind of crazy. So I don't want to go too on, guys. We're running a little bit late. I gotta get James.
We're bulls over here.
Let's get everybody else's final thoughts in here. James, what's your final thoughts on anything to comment on Patrick's visionary interesting things there? You're muted. Visions of the future. Patrick's visions of the future. What do you think, James?
Yeah, I think Patrick's literally got a vision about what all these technologies are going to be put to use to. And like my primary focus right now is just to understand what the BIPs are trying to describe, and just understand like the validation model that we're moving towards, where more and more of the validation is going is no longer explicit. From an abstraction point, that's really interesting to me. But I have no idea like what the applications will be. Like I don't build products for these kind of things. But yeah, I think it's great. I think it's those are really cool ideas. I'm very interested to see how we're going to merge it in, and how we're going to build consensus around introducing these features. But it seems to be on the right track.
Yeah, it's hard to create the big picture. Like, Patrick, you laid it out fairly well, but it's just hard to get a big picture of all of these technologies like interoperating together. And I kind of sort of pictured it where Lightning would be like this one of the interoperable layers where everybody can kind of connect to, but that is still going to only be like one piece. And the atomic swap's still one piece, and there's going to be other pieces that's going to be needed. So it's going to be interesting to see how that all plays out together. So awesome, James. Alex, final comments before we close the show. What do you got?
Thank you for having me. I'll plug Lolly real quick and just say easy way for your friends and family to earn Bitcoin. Good first entry into Bitcoin, and very easy to share. I would love anyone's take on it, anyone's suggestions for new features. And thank you for having me.
Awesome, man. Had a great time, Alex. Thanks so much. Where can we find out more about you? Where website or Twitter handle?
Yeah, it's lolli.com, lolli.com, and Twitter handle Alex Edelman. And then our company Twitter handle is Try Lolli.
Yes. Awesome stuff, guys. It's just a really great company, really great. It's a very Bitcoin focused company, and it's a great introductory way for somebody who's not a tech person or anything like that to get into Bitcoin, to start earning Bitcoin. Because really, that's how we get the Bitcoin in the hands of millions and millions of people, is let them start earning it, right? And that's why I really encourage people to, to do what you love, but do it with Bitcoin. Get in early, start earning it. Don't need to buy or invest, right? Like that's financial terms and things. For the average person, just start doing just start doing, maybe providing a percentage of your service or product, in Bitcoin, and play with it and see how it goes. And then of course you got services like Lolli that allow the retail user to start really earning as well. So very interesting stuff. James, my friend, you have an awesome course on there, man. Tell us again where we can find out more about you and that course.
Thank you very much thanks for having me. I really appreciate it. So my website's teachbitcoin.io. And in many ways, this course it's going to be a webinar formatted course, but it's in many ways, it's a culmination of a lot of the teaching that I've been doing at universities and other institutions. And the focus is really on the Bitcoin protocol. So my belief is, as the more we expose developers to the actual protocol and the protocol details, the easier it is to get into the actual implementation, right? So instead of you guys just doing a command line exercises with, let's say, Bitcoin D, which is very high level, and just learning API. I want you guys to really get deep dive into the design motivations behind the protocol. I think Lightning, for example, has brought a whole wave of web developers on board, which is fantastic. But Lightning, on the other hand, abstracts a lot more, let's say, than Bitcoin D or the full node, where you actually have to craft your own transactions. So that's what I'm trying to do. I'm trying to bring the protocol and the protocol design motivations. And there's a lot of history and a lot of technical baggage that comes with it, but it's super exciting. I'm trying to bring that to new developers.
Yeah, man. Again, keep up the good work. Keep up the videos. We're loving it, man. We're loving it. Really great stuff. So let's go finally to Patrick. Patrick, man, you laid down some visionary stuff, man. It's really interesting. I hope the viewers can rewatch it a couple times to really start to grab it, because I know I'm gonna have to rewatch it a couple times.
And then you got to take, you got to Google each keyword and spend like 2 or 3 hours reading other people's papers about those things.
Exactly.
Well, right? Or like a day each. Yeah, I know. I mean, it's a lot, right? And yeah, I honestly, like, I would love it if I had like a bunch of VC money from like Jack Dorsey, especially. He's a cool dude. He's got a good beard. He is really into Eastern stuff, which I appreciate. And I could just pump out, like, I wish I could be like Lightning Labs and Blockstream, but I'm too poor, basically. So
Blockstream just keeps pumping out products, man. It's just hard not to be a Blockstream fanboy right now. I'm sorry. They pumped out so many things in 2018. It's ridiculous.
Yeah, simplicity is cool too. I mean, it's a clever idea. You kind of like clip off the Godelian edges of Ethereum model. I'm just not super sure if like hashing down, code execution is really necessary versus BFT stuff, where you just execute whatever code in the app wrapper and then you have these underlying checks and balances. It depends on cost and efficiency, right? So part of the cost with BFT stuff is you got to pay whatever fees to publish a potentially large fraud proof in a tail scenario, but maybe it's cheaper most of the time. Anywho, I think I'd like to just conclude on like a Jerry Springer final thought kind of a thing. Well, first of all, here's the shell. TradeLayer is our project. We're putting out a Qt client for Litecoin pretty soon. So we're launching on Litecoin. It's the testnet to Bitcoin, if you haven't heard of it. And it's also the Super Saiyan Blue Vegeta to Bitcoin's Goku. So if you haven't noticed the rebrand, and also I got these just specifically in honor of the. No, I'm just kidding. That's a coincidence.
Oh my god.
Yeah. No, but no, I am a fan of Litecoin. So we're launching on Litecoin, and then we're going to come out with a Bitcoin client. So the Qt client, you can run it automatically. It participates in like a sort of sweepstakes to earn a node reward. Where you have to produce the consensus hash, which shows that you got the block. It was very quick, and then you're able to do this computation and spit out a cipher. So yeah, we're going to be like doing a sort of fair launch period for that over the course of 2019, taking some notes. We're trying to do a nice wide period, and then it's going to be used on the DEX, and then eventually it's going to plug in to all the other stack, because I wouldn't be a very good founder if I was like, no, like this is my burrow and it's just gonna like, there's never gonna be a winter, there's never gonna be, no, everything's gonna change, you know, so no promises or anything, but it's cool tech. So we'd love to get people out to check that out. And then my Jerry Springer final thought here is that, you know, we went through like a little civil war in Bitcoin in 2017. And then a lot of people got wrecked. Bitcoiners got less wrecked, and we're learning some economic science from how much less wrecked and why. And it's, you know, it's because there's more people willing to suffer the drawdown in the sedimentary layers of HODL, right? That's a financial term. And, you know, so that's great. We learned a lot of things. And then, you know, in the middle of the war, there was so much rhetoric that the pure scientific discourse got lost a little bit, right? And it was because, well, these guys are like dangerous or whatever, right?
It turned into a power play instead of a technical play, right?
Yeah, it became about a lot of this, yeah. So, you know, and like I was saying about the finality thing in Tendermint, and like they never consider that with sidechains, there's been a degree of, you know, people branching off and staying in their own spheres. And so I think we're really going to be moving forward now that we're integrating different pools of knowledge. And, you know, if Bitcoin is destined to be the #1 money, then it'll aggregate the benefits from that. And if it's not, then, you know, you'll have to adjust your portfolio. I don't know, right? But like, you know, I mean, it's not the end of the world. Of course, if you're 100% long Bitcoin, that's, you know, it hurts you more, right? But that's cool. I'm mostly in Bitcoin as collateral. I do like derivatives trades and stuff to try to like make ends meet. I'm not just hodling on for dear life, waiting for the next wave. You know, I got a payroll and everything. And I believe in that. I believe in crypto dollarization. But anyway, the conclusion is, let's all come together in the scientific spirit and really accelerate this stuff instead of stagnating in little cloisters. And also, of course, you know, take care of yourselves and each other.
Obviously, we got to do that, man. Obviously. So thanks so much, man. Really appreciate the comments, Patrick. Had a great time, everybody. Thank you guys so much again for donating your time. We went over an hour, but again, guys, you guys came through. You killed it, all of you. So thank you guys so much. We hope everybody had a great time. Again, if you guys missed the show, you can find us in the comments. And of course, we put out these shows every Sunday. We have a bunch more shows coming out, and I believe we have a brand new Bitcoin Matters coming out first thing tomorrow morning to start your week off right. So make sure to check that out. Much more shows, of course, to come here on the CryptoCast Network. Thanks again, ladies and gentlemen, so much for joining. And until next time, please keep talking Bitcoin. We'll see you guys later. Bye-bye.
Take care. Bye.